Hi there, welcome to Neppy Invest. So another video on my video series of Appendix 4Cs that are being released consistently now by companies on the ASX. And today I'll be looking at a company called Betmakers, and their ASX code is BET. They do have a market cap roughly around 250 or $260 million. And so for those who don't know what Betmakers do, they provide software services for the horse racing industry. I think it's solely the horse racing industry. So forgive me if it's other racing industries. But some of their customers are Racing New South Wales, Racing Queensland, Racing Victoria, Ladbrokers, Tabcorp, Betfair. So they provide services for not only the organisations that conduct the racing, but also sort of the betting agencies as well. So as I mentioned before, with a market cap of $250, $260 million, they're not the cheapest company. But with this Appendix 4C, they did move into my watch list for future reference. And I'll be following them for just following their future cash flow reports or following what they do with the share price. So let's get right into it. This is their operating cash flow from operations. And the first number there right at the top, receipts from customers. So $3.9 million, not too shabby there. But right at the bottom there is the most exciting thing there, that they're only cash flow negative to the tune of $55,000. So that's not much at all. So they're almost hitting that inflection point where you want to see companies do, or small companies do, where they become cash flow positive in operations. And once they become cash flow positive in operations, that's when you see management hit their stride. They can make really important decisions in how to allocate capital. For instance, they could decide to make some acquisitions, do some research and development, share buybacks or dividends. I prefer them not to do share buybacks or dividends because the best growth for a company is if they can allocate really efficiently into research and development, particularly, and maybe even some acquisitions. So the next thing I'll look at is just the history of the cash receipts going back. So they've got a positive trend here. First few years or year and a half here, they didn't do much traction, or they didn't have much traction. So until we get to April 2020, we have seen those cash receipts really take off. So it's gone from $1.7 million in April 2020 to $3.9 million this quarter. So it's quite exciting. And the reason I put this on my watch list also is just to see how they do in the next few quarters, see if they can maintain that sort of growth and become cash flow positive. And I think if they do that, even a market cap of $250, $260 million will be quite cheap. So some of the other details in their quarterly cash flow report. So they do have $16 million in annual recurring revenue. So I like to see that. Typically, when I see a company with annual recurring revenue, I times that by 10 or so. So if you times that by 10, that's sort of rough, give you a rough indication of a $160 million market cap. So anything above that, they are a little bit expensive. Anything below that would be quite cheap. But then again, you have to take into account the growth rate of the annual recurring revenue as well. They do have a lot of cash on hand. So even though they do have a market cap of $250 or $260 million, when you take the cash into hand, especially with no debt, their enterprise value is almost $200 million or just above $200 million. And you'll notice they've actually increased their cash on hand, even though they are cash flow negative in operations. The reason they've increased their cash on hand is because they did have quite a few options exercised this quarter. So if you don't know what an option is, it's just it's a convertible security. So if you own options to buy, say, Betmakers at 20 cents, you could buy those. You exercise those options for 20 cents, which means you buy Betmakers at 20 cents, and then you can sell straight away for 50 cents. I think the Betmakers share price is around 50 cents. So you make immediate double and a half your profit. They do mention in the quarterly cash flow report they are seeking growth opportunities and organic and inorganic. And so, of course, inorganic means acquisitions, and organic growth, which is the ones I'm mostly keen on, is see if they can maintain their customers, grow the number of customers, and even get those current customers to spend a little bit more, maybe do some research and development, create new products, that sort of thing. So it's good to see they're thinking about that thing. Chart-wise, this is a very healthy looking chart because this is sort of what you want to see. So you want to see share price going from the bottom left to the top right. It's definitely done that. Take away the COVID-19 panic, the big sell down there. It looks pretty good. Share price has been mostly hovering above the 100-day moving average. That's quite bullish. About a few weeks ago, it did get right on the moving average, 100-day moving average of around 40 cents, and then it's bounced off that. Its quarterly cash flow report was issued on the 13th of October. Market actually didn't care all that much for it, so share price went down 1%, but the next day share price did increase by 11%. A few reasons that could have happened. They might have released another announcement, or sometimes the market takes a little bit of time to sort of digest an announcement, and that's what might have happened on this day. So quite bullish with this chart. Looks like around 50 to 60 cents would be a bit of resistance, but hopefully it will burst through that. Hopefully for shareholders, it'll burst through that resistance of around 50 to 60 cents. So once it gets above 60 cents, it's in blue sky territory. So that's all I got for my Betmakers Appendix 4C video. Leave a comment if you want to, or you know a little bit more about this company. I've made a few mistakes or not, I'm not sure. And of course, I'm not a professional advisor, so if you do need professional advice, make sure you seek out a professional advisor. So that's all for this video. Hopefully you join me on my journey of looking into Appendix 4C reports for future companies. And that's all for today. I'll talk to you later.